Look, these are fairly chunky downgrades, and I'm wondering about the reasons behind them. What is going on here? Why the downgrades?
So, Guy, the main reason for the downgrade for this year comes from significant downgrades for the US and China. So we have the US being downgraded by 1.2 percentage points, and China also quite significantly. The reason for the US is that we no longer have the Build Back Better fiscal package in our baseline, and we are also expecting monetary tightening in the US, so that's in the baseline, that's been baked into it, and there are supply disruptions. So these factors are behind the downgrade for the US. In the case of China, we have the faster than expected slowdown in the real estate sector, and also the weakness in recovery in private consumption that's leading to the downgrades.
Gita, talk to us a little bit about monetary policy here. You're seeing a very serious divergence between, say, the easing, or say the tightening in the United States, whereas the easing in other economies like China, for example. How much is that divergence a risk to the global economy?
I think it is a reflection of the fact that countries are facing different kinds of problems, and they're also recovering at very different speeds. In the case of the US, the US economy is back to pre-pandemic trend. The unemployment rate is under 4%. So it's been a very strong recovery. Private demand has been very strong. And so all of that combined with inflation at 7% at the end of last year, just all point in one direction, which is that interest rates have to go up. In the case of China, it is an economy where momentum was very high, but it slowed, and they are still not back to pre-pandemic trends. Private consumption remains weak. And also the amount of stimulus that they provided, both on fiscal and monetary, was somewhat smaller than the US. So countries are at very different points of it. I think the important thing to keep in mind is that interest rates in the US, at least, are going up at a time when this recovery has been strong. Even if you look at whatever has been baked into market interest rates, those are still small numbers, given the level of inflation. So it's still a fairly accommodative monetary stance.
Gita, what is your view on the word transitory? Is it useful?
Well, I think it's become confusing for people because some people think transitory means literally a very quick up and down. But what we've seen is inflation has gone up quite a bit, and it has persisted for longer. So our projection is for inflation to come down through much of this year, for instance, for the US, but it stays elevated. So by the end of this year, if you look at core PCE inflation, we still have that at 3.4%, which is significantly higher than the Fed's target. And so in that sense, you're seeing a decline. We expect it to come down, but we're going to have to wait until 2023, at least given current expectations, for inflation to come back down much closer to the Fed target.
Gita, a key place where inflation perhaps isn't transitory, or isn't proving to be at least, is a lot of those emerging markets. The one that comes to mind, to me at least, is Argentina. They do have a debt payment due, about $700 million on Friday. Do you expect them to meet that payment?
We're working very closely with the Argentine authorities. We're all aligned. We would like to have a program that will help the people of Argentina. It has to be a program that can address the imbalances in the country, because that's the only way to help the people of Argentina. At the same time, we recognize that it's a very difficult situation socially, economically, and so we're being pragmatic in our approach and being flexible. But we need a program that can help the people of Argentina, so we're just working very closely with them.
Gita, why is the Eurozone struggling to bounce back as we're seeing elsewhere? We are seeing relatively, by comparison, weak growth. And I'm wondering why that is. Is it the high debt levels in places like Italy? Is it the relatively small fiscal response? Is it concerns about what is happening with the energy story going forward and the inflation that is likely to derive from it? What is happening here, and why aren't we getting a more robust growth story out of Europe?
I would say that for the euro area, for instance, as a whole, that I would say that the recovery has been going quite well. It's not the same as the US. It's not back to pre-pandemic trend. There are differences within the euro area. So, for instance, France is expected to be back to pre-pandemic levels at the end of this year, while most of the other big economies are more in 2022. So it's somewhat slower. But that's also a reflection of the fact that several of these countries depend very heavily on tourism, and that has not recovered with this ongoing pandemic. Germany depends very heavily on the auto sector, and that's one of the reasons for the downgrade that we have for Germany. But again, if I look at the euro area in the medium term, for instance, I would say they're basically back to pre-pandemic trends. So overall, I think there are country-specific factors for why things are not going well, but I wouldn't say that the overall sentiment is one of disappointing recoveries.
Gita, we've got about 30 seconds here, so I'll wrap it up with one key question, which is, of course, on everyone's mind, and that is the Russia-Ukraine kind of conflict here. How much of that is going to affect the global economy?
I mean, that is a major concern. We've had headline inflation go up everywhere because of high energy prices, and this conflict can only send that higher. So that is a major risk, and whether that will then lead to second-round effects on inflation and have implications for inflation expectations and so on. So I think that is a very important risk we're paying close attention to.